Is the September bear market over? Well, we'll see. Of course, I jest a little bit. It was nearly a 5% correction in the month of September, but if you listen to the media, they certainly touted it like a bear market for certain. Is it over yet? Is it now time to start adding exposure to portfolios as we head into the seasonally strong period of the year? A couple of things that we're looking for here, of course, is that we are looking for our MACD signal here to certainly turn up, because again, if we can get a MACD buy signal going into the end of the year, that would certainly support higher asset prices in the short term. I did note in this past weekend's newsletter on the website now at realinvestmentadvice.com that markets were very oversold on a short-term basis. Got lots of emails over the weekend saying, well, valuations are the highest in history. How can you even say markets are oversold? Well, on a short-term basis, markets are indeed oversold. And in fact, if we look at where markets are on Friday, we are back to levels of oversold conditions that we haven't seen since August and September of last year during that whole back-to-back decline that we had at that period of time. And of course, that led to the rally that we had going ever since. Now, that oversold condition provides some fuel on a short-term basis to give a lift to stocks in the near term. As we've gotten a little bit washed out, take a look at like the CNN Fear Greed Index, very much into the fear category. Our own technical gauges, as well as our own indicator of allocation models, have gotten back to more neutral positions in portfolios as well. So again, when we look at where markets are on the short-term basis, they are oversold enough here to at least elicit a rally here over the next couple of weeks. If we step back out to a longer term picture here and look at the markets from a weekly perspective, we see that this bullish trend remains intact for right now. And while we're on a weekly sell signal and money flows are declining, we haven't really violated any major levels of support just yet. However, this weekly sell signal and declining money flows on a weekly basis does suggest that rallies here could be weak, and particularly heading into the end of the year, we've got a lot of stuff going on. Potentially weaker economic growth, which is already seen by the Atlanta Fed dropping down their growth rates down below 3% growth. That's going to weigh on earnings growth. Of course, you've got the Fed talking about tapering starting in November. We've got a lot of potential headwinds here from China to Japan, all the way here to just internal measures of the technical market itself, all suggesting markets could remain weak here at least through October. We are oversold enough here that we could start to get a little bit of a rally into the markets. We've got to clear overhead resistance at the 20-day moving average as well as the 50-day moving average. And again, watching for this MACD signal to turn up positive. The one other headwind here is interest rates. While interest rates spiked up here heading into the default saga that we had over the last week or so, now that continuing resolution has passed, not surprising, we're starting to see interest rates turn back towards their support here longer term. A decline in interest rates is going to potentially lead to better performance out of the technology sector and the growth sectors of the markets. And again, with earnings season right on us, these are the companies that are likely going to report the best earnings growth. So we could very well see some money moving back into the growth sector of the portfolio. And again, those are kind of some of the areas you want to look on. On our daily commentary today on our website, we actually screen for some of those technology names to be looking at. That's in our daily commentary today at realinvestmentadvice.com. That's 3 minutes on markets and money. See you back here tomorrow.